The FOMC's assessment that it can be patient in beginning to normalize policy means that the committee considers it unlikely that economic conditions will warrant an increase in the target range for the federal funds rate for at least the next couple of FOMC meetings. That a modification of the forward guidance should not be read as indicating that the committee will necessarily increase the target range in a couple of meetings. If economic conditions continue to improve, as the committee anticipates, the committee will at some point begin considering an increase in the target range for the federal funds rate on a meeting-by-meeting basis. There has been important progress toward the FOMC's objective of maximum employment. However, despite this improvement, too many Americans remain unemployed or underemployed, wage growth is still sluggish, and inflation remains well below our longer-run objective. Before raising rates, we will want to feel confident that the recovery will continue and that inflation is moving up over time. Audit the Fed is a bill that would politicize monetary policy, would bring short-term political pressures to bear on the Fed. What I think is really critically important is that the Fed be able to deliberate on the best way to meet the responsibilities that Congress has assigned to us to achieve maximum employment and price stability, and that we be able to do so free of short-term political pressures.
Before we get started, please check out our sponsor, Lear Capital. That's Lear Capital. Click that link below, give them a call, download a free investor kit, buy gold, buy silver. It's real money, it's real wealth, and it's real protection. The precious metals leader, Lear Capital. Good morning, everybody. I'm Christopher Greene. You're tuning into AMTV, Alternative Media Television. Today we're going to learn about the Federal Reserve. That's right, a criminal private entity. And the person at the helm of this, who really just is a mouthpiece and a talking head for the corporate interests that she represents, Janet Yellen. And the Federal Reserve's dual mandate. That's right, there's supposed to be a dual mandate of price stability, monitoring inflation. You know how she likes to say, we got to be at 2%, is what she says. We got to be at 2% inflation, although no one knows what that means, because the inflation gauge and how they measure it is all over the board. It's kind of like unemployment. You know, you look at the shadow stats, unemployment's really at like 10 to 15%, but they say it's at 6, roughly. And also, employment is the second mandate. Now, if we were to grade Janet Yellen and the other hoes, because Janet's a money hoe, she's a money printing hoe, people like Ben Bernanke and his predecessor, Alan Greenspan, they would get an F in price stability. Stability means that we have consistency. We're moving left to right and that there's not a lot of volatility. But if you've been paying attention in 2008, 2009, we had the worst financial crash since the Great Depression in the 1930s, arguably worse. And since then, courtesy of the Federal Reserve and their alleged dual mandate, we've had a parabolic move. That's right, a straight line higher, parabolic. We've had this kind of V-shaped volatility. So they rank an F. Again, these money printing hoe bags at the Federal Reserve. Janet Yellen and the Federal Reserve, her trick. She's a prostitute. And yes, Janet, I know it's the oldest business in the book, but you're still a hoe. You're still a money printing whore. And with employment, if we're to measure that, all you have to do is look at millennials and see how they're doing paying off their credit card debt and their student loans to understand they also rank an F with the real unemployment rate. Not the rate they give you, but the real unemployment rate. Again, I don't know how Wall Street takes themselves seriously, how the Federal Reserve can honestly take themselves seriously anymore. They never, ever raise interest rates. In fact, I'm going to die an old man by the time they bump it up 25 bips. I will be dead by the time they raise interest rates. They haven't touched interest rates since 2006. And the question you should ask is, if they're not going to do anything, if they're just going to read prepared statements every time they have one of these meetings, like yesterday and today when Janet Yellen's talking about housing, why do we even need to pay a human? Why don't we just put a robot in the position of Fed chairman or chairwoman? So again, it's the Federal Reserve that honestly, quite frankly, is going to end the world. This private entity, which really in effect has a triple mandate now. Not just a dual mandate that they get an F on, but a triple mandate. The triple mandate is a mandate of bailouts, of scumbaggery, of donating from taxpayers, courtesy of all of us little people. You know, the groundlings, the peasants that make up American society today, donating trillions of dollars to these banks. You know, banks like JP Morgan Chase that are closing 5% of their branches and they're moving into a world of robotics and artificial intelligence. We donate to the billionaires like Jamie Dimon so he can buy more Learjets. That's the triple mandate at the Federal Reserve. Again, a criminal entity. Senator Rand Paul, presidential hopeful 2016, suggests we should audit the Fed. Well, you know what? We should take it a step further. We shouldn't just audit it. We should do as his father said Ron did. We should end the Federal Reserve. This is a criminal entity and a criminal institution, and it is a laughingstock. And these people are whores. They are money printing hoes. And it's exactly who and what Janet Yellen is. Share this video with your friends and family. Again, let them know the Federal Reserve is going to end the world. They're going to collapse our entire system here in the United States of America. These bailouts into infinity are going to erase everything that America once was, once had, and once stood for. It's the end. Also, these hobags and hookers can ride the wave a couple more weeks before the inevitable collapse. Again, the longer they prolong and extend and pretend and kick the can down the road like they're doing with Greece and here in America, the longer we have a parabolic move, that's right, just a straight shot up into the stratosphere with the U.S. stock market, the worse it's going to be. The more magnetic it will be down to the doldrums, to the depths of hell, when market forces finally take effect, when hobag Janet Yellen finally loses control. I mean, after all, if you've been stimulating like a hooker for years, year after year, since 2006, expect to pay the price. At some point, you're going to inevitably climax, and then it'll all be over. And what are we going to do then? Take interest rates even more negative? Bail out even more bailouts? I mean, what's the response then? We've already shot the last bullet that the Federal Reserve has, that the American people have. At that point, it really might be, just like Vladimir Putin said, the apocalypse. It might very likely be the end of the world. All of us with our pitchforks in the streets, lighting Washington, D.C. on fire. I'm Christopher Greene. Get it out everywhere, make it viral, hard hitting it in your face, and click the link below to support our sponsor.